Go for a business that any idiot can run, because sooner or later, an idiot is probably going to be running it.
Almost every successful person has had to deal with some degree of hardship. How successful you are is really a function of how you deal with failure. And if you deal with failure well and you persist, you have a high probability of being successful.
The short talk is this. I did a lot of math, I made a lot of money, and I gave almost all of it away. That's the story of my life.
I'm a dumb shit. Whatever success I've had in life has had to do more with my knowing how to deal with not knowing than anything I know.
In life and business, there are two cardinal sins. The first is to act without thought, and the second is to not act at all.
There are people that are carrying around absolutely as much information in their head as I am, but I happen to have it pretty well concentrated in a few areas, and I do know what I call my circle of competence. I stay within that circle.
Investing is something where you have to be purely rational and not let emotion affect your decision-making, just the facts.
In the short run, psychology is more important than company fundamentals. What matters is not the quality of the thing you're investing in, but whether the price is high or low relative to the intrinsic value. Market is too optimistic, sell. Market is too pessimistic, buy.
The way to really understand investing is to understand a business. And one of the most important skills you need is a distinguishing between a great business, a good business, a fair business, and a bad business.
Great investors are like great basketball players. They're hard to come by. They have almost a gift, the ability to assimilate information, draw conclusions, and to act on their beliefs. It's a really unique and hard skill to find.
Investing is doing your homework, taking down, understanding a business, understanding the competitive dynamics of an industry, understanding what management's going to do, understanding what price you're going to pay. The value of anything, the present value of the cash you can take out of it over its life.
My algorithm has always been, you get smart people together, you give them a lot of freedom, create an atmosphere where everyone talks to everyone else. You provide the best infrastructure, the best computers and so on that people can work with, and make everyone partners.
My idea of risk control is a little non-conventional. I like putting all my eggs in one basket and then watching the basket very carefully. Most business schools, they teach a lot of nonsense called risk-adjusted return and diversification.
Financial markets, they're not discounting the future. They're actually creating the future because the decisions market participants make actually shape future course of affairs.
Work hard. There's no such thing as success without hard work. Some people have this get-rich-quick notion. I've never seen it. It's like a casino. Maybe it's happened, but it's not the normal way. In your lifetime, you should be prepared to do a bunch of different things.
I'm not qualified to criticize the efficient market hypothesis because I'm not familiar with it. The fact that I was able to make a living for 50 years without being familiar with it is a comment on the value of that.
I was passionate about the markets. Couldn't wait for Mondays. I mean, I hated my weekends because I couldn't wait to get back and for the markets to open. You're not motivated by it. It's going to be reflected in the work you do.
I didn't know whether the pound was going to devalue. What I did know was if they didn't devalue, my fund was going to lose 50 basis points. If they did devalue, I was going to make 2,000 basis points.
I can't give you a formulaic approach because I don't use one. If you want a formula, you should go back to graduate school. They'll give you lots of formulas that won't work.
I need this money in a year. I need this money in 2 years. Longer term, stock market's been the best place to be. Last 10 years, last 30 years, last 130 years. But if you need the money in 1 or 2 years, you shouldn't be buying stocks.
How do you make money as an investor? The people who don't know think the way you do it is by buying good assets. That is not the secret for success. The secret for success is buying things for less than they're worth.
If every time you lost money, you just got depressed, angry, or couldn't deal with it, you'd have a very short career.
The holy grail of investing is to find 10 to 15 good, uncorrelated return streams. At 15, you'll eliminate 80% of your risk, so you'll improve your return to risk ratio by a factor of 5.
A lot of people like to be right in this world, and then they get rolled over by the markets. And the question is, when you're wrong, what do you do about it? Do they want to be right or do they want to make money?
My first boss used to say the obvious is obviously wrong. Too many investors look at the present. The present is already in the price. You have to think out of the box and sort of visualize 18 to 24 months from now what the world is going to be and what securities might trade at.
Most decisions are not binary, and there are usually better answers waiting to be found if you do the analysis and involve the right people.
Well, I like to say that you can teach a physicist finance, but you can't teach a finance person physics.
It's not whether you're right or wrong, but how much money you make when you're right, and how much you lose when you're wrong.
I can't give you a formulaic approach because I don't use one. If you want a formula, you should go back to graduate school. They'll give you lots of formulas that won't work.
Go for a business that any idiot can run, because sooner or later, an idiot is probably going to be running it. Be fearful when others are greedy, and be greedy when others are fearful. Capital markets reward you for what other people have yet to ascertain and learn. I like putting all my eggs in one basket, and then watching the basket very carefully. The trick is not to trust your gut feelings, but rather to discipline yourself to ignore them. You're going to be wrong a lot. So, if that's the case, you better make sure your losses are as small as they can be, and that your winners are bigger. Opportunity comes to the prepared mind. It's not supposed to be easy. Anyone who finds it easy is stupid. Once we realize that imperfect understanding is the human condition, there is no shame in being wrong, only in failing to correct our mistakes. If you don't find a way to make money while you sleep, you will work until you die. The best decisions are made with data, not just gut feelings.